one.
Hello and welcome to BQ Brahma Miradadia. Joining us on the show today, we have Mr. Sanjay Sethi, MD CEO at Chalet Hotels, to decode Q3 numbers for us. Welcome to the show, Sanjay, and a very good afternoon.
Good afternoon, Hazel. Pleasure being here.
Absolutely. Sanjay, coming to my first question, overall, it's the best ever quarterly performance on key parameters that we've seen from a Chalet Hotels. What has led this kind of a growth? Because it's a complete turnaround that we've seen.
Well, this is growth which is pretty normal and natural. We're coming out of a pandemic. The growth will be step-ups as we go from quarter to quarter. There's also a typical annual cycle that gets followed in hospitality business, and Q2 to Q3 typically is a fairly decent jump. I think we've witnessed that with Q3 being about 18% higher sequentially. Revenues and 35% higher on EBITDA. PAT, of course, is 5.5x of Q2. So clearly, it's a good quarter. It's been an exceptionally good quarter. It's not only a good quarter for in comparison to Q2, but it's the best ever quarter for Chalet Hotels.
Right. So overall, Sanjay, on the ADR front, right, at 10,168 is what we've seen. Are these kind of numbers sustainable?
Oh, yes, absolutely. So as I said, the Q2 to Q3, there's typically a jump because the winter season kicks in, and October to March, you see a lot more foreigners coming in, and therefore the ADRs do tend to jump, this is a natural cycle, even pre-pandemic, so it's not unnatural. But this time the jump is sharper because we had the ADRs to catch up with, number one. Number two, I think structurally the industry has got a very positive environment now. Demand's growing, high single to double-digit numbers. Supply is growing at about 4.5%. So clearly, the arbitrage between the supply and demand that we have is going to hold us good for the next 4 or 5 years, and we see this growing largely through ADRs going forward, because ADRs are still very discounted to the rest of the world. At 10,000 rupees, and 66% of the inventory sits in Bombay, which is your gateway city into India. It's still discounted by almost about 80% to the premium gateway cities across the world, whether it's New York, London, Singapore, Hong Kong, any of those.
Right. So overall, it's the hospitality revenues which have seen a sequential growth. There has been some flattish move in terms of retail and commercial portfolio. Any reason for that?
Yeah, so look, a lot of our commercial portfolio is being restructured. Our retail portfolio is being restructured to commercial. So that's actually out. So, for example, the Bangalore Mall, which is roughly around 300,000 square foot, has not been in action. That's being converted to office space. And a lot of the capex that we put in on office space is getting completed now, as we speak, in the current and the next quarter. And that will start getting monetized from there onwards. So we expect a big ramp up on the non-hospitality revenues a couple of quarters from now.
Right. And apart from that, from an occupancy perspective as well, we've been lower in the third quarter at 65% versus 75% what we'd seen probably in the third quarter of FY20, I would say, which is pre-pandemic levels. By when do we see occupancy levels also getting back to normalcy?
So here, what's happened is there were large holidays in October. There were multiple holidays. There was Dussehra, Diwali, Bhai Dooj, and Ashtami. All of them fell midweek during the October month. Which meant that business travel didn't happen during those weeks. So, accounting for the weekends around those holidays and the weekdays, we lost something like 17 days out of the 31 days in October. And then typically from October, but that's a natural phenomenon. It happens every year. From the end of third week of December, occupancy started to fall off. And we saw that happening from 17th, because 17th was a Friday this time. And then they pick up only after first week of January. So we saw that happen. I'm not overtly concerned about occupancies. January and February after the holidays have come back very, very strong. And November, occupancies were again high 70s. So when there were no holidays, those months have done exceptionally well. In fact, better than Q2 also.
Okay. And overall, again, from say the foreign travel perspective as well, there have been issues with visa, direct flight connectivity issues. Overall, how is the scenario looking like?
So in Q2, 41% of the revenue came from foreign travel. Sorry, Q3. Q2, it was only 33%. So clearly it's ramping up. And we see that growth happening because then the direct flights have improved significantly and there are few more getting added over the next few weeks. So Mumbai and Bangalore, which didn't have direct flights, they started about a month and a half back in small numbers, and that's getting ramped up now. By end of February, I think they'll be back to full force, which will create the capacity to bring in travelers from US directly into India. And the visa problem has now been sorted out. So we expect this to sort of now push the foreign travel rates to increase significantly from here onwards.
Okay. And overall, in terms of, additions in terms of inventory, how is that looking like?
So we've got the 88 rooms at Novotel in Pune being handed over as we speak to the hotel team. The renovation at Powai, Westin Powai is almost complete. So 129 rooms are back in action from this next week, actually. So that's 129 plus 88. Let's round it off. It's about 215, 220 odd rooms. And the new hotel of 168 rooms at Hyderabad is getting added on by April this year. So we'll have almost about a little under 400 rooms that will get added on in the next 2 months' time, which will increase capacity maybe by 15, 16% for us. Some of them is coming back, 120 rooms of Westin Powai, but increase in capacity is 90 plus 170, so that's about 160 rooms. So that's about 10, 11% increase in capacity, which will prop up the business. In addition to that, almost 1.5 million square foot of office space is getting back into action. So the addition capacity and the completion of renovation in the hotels and the 1.5 million square foot in office will, of course, create a step-up growth for us.
Right. So when are we expecting the assets to actually begin sweating for us as a company?
We've got a lot of capex under progress right now. So, this 1.5 million, as I said, comes back this year comes as additional office space into the company, and they'll start yielding revenues and EBITDAs by the second half of the year, probably even the Bangalore one probably before that. And the hotel rooms will, of course, start yielding results almost immediately, 2 or 3 months from now.
Right.
And then we've got another 1 million square foot of office space, which is still to come back into action, come into the portfolio. We've also got hotels planned in Delhi and Navi Mumbai, which are additional hotels, which is total up to almost about a little shy of 700 rooms. So that's serious capacity addition for us.
Right. So overall, from here on, what's the kind of growth that we are actually chasing as a company?
Look, we don't give guidance on numbers as such at Chalet, but we're not looking at standard inflationary growth. We're looking at few multiples of inflation as growth targets for us on the revenue and EBITDA side. So we're going to beat inflation by a few times over.
Right. But no, the question coming to you is overall, I mean, we have a lot of things happening on the capex front. There is a lot of value unlocking that we're looking at as well. I mean, the inventory addition is in the hotel and the commercial segment. There are opportunities in Koramangala project as well. So overall, I mean, what I hear from you is that yes, we are in a sweet spot from a demand perspective. We are in a sweet spot in terms of supply perspective, right? True. Now, if you have to match both of these together, are we going to be able to actually beat the best ever numbers that we've seen so far?
Absolutely. No doubt about that.
Right. All right, Sanjay. Thank you so much for speaking to us. In fact, one question actually I want to speak with you is with regards to the impact of TCS on tourism business. What would your view be? Because now that's increased to 20% from an existing 5% for outbound. So how are you looking at it as a impact?
Positive. It's positive for us because we get to retain more travelers within the country. It actually helps us. So whereas I'm not in favor of such a high increase, I think it's negative for the industry overall for the outbound part of it. But from a Chalet perspective, it is a positive.
Right. All right, Sanjay. Thank you so much for speaking to us at BK Prime. Stay safe and speak to you soon again.
Look forward. Thank you.